Most people lose money in stock market because they never understand a simple pattern in which the stock market operates. Once you understand this pattern, you will never fear stock market crashes. Wealth creation in stock market is never about timing the market, but it's more about understanding the pattern in which it operates, which revolves around the three key concepts which I'll go through now. First is a correction. A correction is when excess speculation is removed out from the market and when the market falls by at least 10% to 20% from its recent peak. Correction happens on an average once every year. Second is the bear market. When the market falls by at least 20% from its recent peak is a bear market. Historically, this has happened every 3 to 5 years. But something very interesting happens here. Every single bear market has led to a new all-time high. This is where long-term investors make money, and this is where the mutual fund shows its class. Third one is a crash. When the market suddenly falls by at least 20% from its recent peak is a crash. Crashes have not lasted too long, and the best example was COVID. If you regularly invest into simple index funds like S&P 500 or a Nasdaq 100, you would be ahead in your investment journey by at least 95% of the people who try to beat the market or who try to do crazy things which they don't understand themselves. To demonstrate that, I've gone through a study which was done by Morningstar, in which they have just studied the hypothetical US stock market, where from 1870 till almost 2020, they have looked at each and every correction, bear market, and crash. In spite of all these correction and crashes, a dollar invested in 1870 would have grown to the value of 35,000 US dollar. So the lesson learned is stay invested for a long period of time. Hope you've enjoyed this short teaser on wealth creation. Good luck. Thank you.